Alrighty. Good afternoon. Hello, hello. How are you doing today? How's everyone today? If you can see me okay, hear me alright, put into the chat, let me know. And say hi. We'll give it a couple of minutes before we get started. Hey Crossmogenation, how are you doing? Hey Kelvin, how are you doing? Hope you're well. Good to see you guys here again. Nice and early on the first day of the trading week. Hey, Galaxy Productions from Trinidad and Tobago. Fantastic. Good to see you here. Nice to see you too, Wasim. Hey, D. Ready to go. I'm ready. I'm just going to give it a couple of minutes before we get started. And also, I'm looking to the numbers. Everyone is here, but make sure you do click that like button. Help me out significantly with that YouTube algorithm. Hey, Mad Maniac. Hope you're well. BL, I know you've been a keen follower, so good to see you back on again. Hey, Dishat, how you doing? Good stuff. Thank you all for clicking that like button. I know a couple of you have not clicked it yet. Make sure you do click that like button. Helps a lot. Give it one more minute and we'll get started. I hope you've been trading well. Markets have been moving. Markets have been moving quite a bit today. A bit unusual, but quite interesting. Good trading setups we've had for today. Alright, today we're here with IC Markets webinar on a live market analysis. So it'll be quite an interesting session. I know it says live session analysis with Yongjin, but it's me. Alrighty. Enough waiting around, let's get started. So again, welcome everyone. Thank you for attending the session. Good to have you guys here with me on this Monday afternoon, evening, morning, wherever you are. As we head into the end of the month, heading into Feb, we do have quite a number of big news events to be released this week ahead. So it's going to be quite an interesting session. We're going to be looking at a couple of possible setups and analysis that will be quite useful. I hope be quite useful for your trading journey. All right. If you do have any questions at any point in time, please feel free to put it into the chat. Let me know. I'll be happy to elaborate onto my analysis or any points that you need further clarification on. And if you're new to the session, welcome. Do let me know where you're joining me from. A couple of you have already, but if you're new to the session, let me know where you're joining me from. And if you're a regular, welcome back. Good to have the regulars on the session. So as usual, before we get started, before we move any further on, any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness to your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. You all know the drill already. What that means is that I will be looking at the news, right? I'll be looking at the charts. I'll be identifying some possible trade setups. Please do not blindly jump into the trades. Do make sure you check that the setups fit with your own trading analysis, your own trading methodology. Make sure you're not over trading, not over leveraged, because I do tend to get through quite a number of charts and analysis if you do jump into all the trades, then I'm very sure you will be over trading and over leveraged. All right, so just make sure you do your own analysis, you do your own due diligence before you jump into any trades. Hey Keith, how are you doing? So with that quick introduction of myself, my name is Jin Dao. Most of you know me as Jin. I'm one of the investment analysts here at the Everest Fortune Group award-winning research team, technical analyst award finalist for Best FX and Equity Research for 2019, 2020, and 2021. I have been trading for 15 plus odd years already in the FX and in the equities markets. So I'll be happy to share with you, my points of view, my experience through the markets, if you have any questions at any point in time. All right. With that, let's get started. Let's keep going. So let me just do a quick refresh. Just for those of you who are new to the session, right? Those of you who are new to the session, I do approach the markets a little bit differently. For me, I do look at a lot more on the news, the fundamental analysis first. So what I'll do is I'll look into what happened in the past week, and then what could happen into the week ahead, and then we'll look into the charts to identify possible setups. All right, so how I approach this is that when I look into the news, I develop a bias, right, a fundamental bias towards where prices should be heading towards. Okay, for example, if I think that the euro dollar should be heading higher, and I'll look into the charts. If the charts do show me that prices are heading higher, then I'll look for it to break a key level before I get into a trade. If it's heading towards the downside but I'm expecting an upward move, I'll be looking for it to bounce off a key level, right, or to reverse towards the upside before I get into a trade. And also I'm more of a trend following trader, right? What that means is that I do prioritize a trend following trade more than a counter trend trade. Okay, only if I have come across many good trades already, I've done many good trades already, then I would look into a possible, if a counter trend trade setup comes around, I'll look at that as a possible speculative trade on a counter trend. But generally, most of my trades are trend following. Okay, with that said, let's look into what has happened through the week before. All right, I do realize that we did this session on Wednesday last week, so a lot of it might be a quick recap, especially those that happened earlier into the week. So I'll skip through all of that. That was in the previous session. You can check the link for that on the channel. But on Thursday, what we actually had, okay, so on Wednesday night or Wednesday morning, we had the CPI data for Australia last week. CPI data was 7.3%, expected 7.6, came out at 8.4, right? So stronger than expected CPI data. What it shows is that we're looking at inflation growth in Australia still climbing towards the upside. Most of it, we've seen that the US, we've seen the US inflation drop, right, slow down in terms of growth. We've seen the UK inflation stop moving higher, sitting right across. But for the Australian right now, we actually see it still climbing towards the upside. What that actually implies is that we might actually see the Fed, we might actually see the Reserve Bank of Australia, the RBA, look into possible further interest rate increases to come, just to try and bring that inflation down towards that 2 to 3% target range, right? So far it hasn't. They've been increasing rates quite aggressively and hasn't had that impact yet. We're looking at possibly this recent climb in CPI data year on year to spur the RBA into another rate increase. All right, so that's something that happened on Wednesday last week. And then the Bank of Canada the Bank of Canada, with the interest rate decision, they rose interest rate by 25 basis point as expected, from a 4.25% to a 4.5%. Went up as expected, but in the statement, I'm not sure whether it was in the statement or it was in the press conference that followed on from the interest rate increase, it was actually said that they were at the turning corner on the inflation, and they were saying that it might be proof that the BOC has done enough, and we could see interest rates, or the hike of interest rates, pausing for now. Okay, we could see the pause of interest rates for now. So what actually happened there, I'll show it to you on the charts first, is on the US CAD. Hey Jamilu, how you doing? On Wednesday last week, we actually saw, this is on the H1 time frame. So I'll go back to Wednesday. On the release of the news, right? On the release of the news at, where was it again? Let me bring that back. Sorry. Not that. At 11 p.m. GMT plus 8, when we saw the interest rate increase, and the statement that we could see interest rate hikes for Canada pausing for now, this happened. Okay, the US CAD shot up. It went from that 1.3376 level straight up towards that 1.3517 level. Totally against what we expected, because the anticipation was that, with an interest rate increase, we should have seen, or we were expecting to see, the Canadian dollar get stronger, pushing towards the downside. So I was looking for this move lower. I think I was talking to you guys about it, where I said that I would be looking to sell if it broke below that 1.3330 level. Right? It didn't do that. It shot up. So it offset our, or rather canceled off our analysis before. Why it shot up? Why price went shooting towards the upside instead is because of that statement that they were going to pause on future interest rate increases, right? They were going to pause on future interest rate increases, and that's why we saw the US CAD shoot towards the upside. All right, so if you were wondering what happened, or why did it shoot up instead of coming down on the US CAD despite the interest rate hike, that's the reason. That statement there saying that they were going to pause on future rates. Following on from that, on Thursday evening, we saw US GDP number was 3.2. It got revised. Was 2.6, revised up to 3.2. Expected 2.6, came out at 2.9. That was somewhat as we expected. We expected still some GDP growth, but still to signal a bit of a weakness there. Okay, and then because of that, when we looked at the dollar index, on that news release on Thursday, where was it? No, sorry. Thursday last week at 9:30. Okay, so we actually saw, is that Thursday? No, it's not Thursday last week. There it is. Where is it? Here. On Thursday last week at 9:30, we actually saw volatility on the dollar, but it bounced strongly from that 101.70 level up towards that 102, almost 102.20 level, right? Shot up on release of the news that we saw that slightly stronger than expected GDP data, and also that's going to signal again some strength to the US economy. That's why we saw this push higher onto Thursday evening. All right. And then on to Friday, we saw core PCE price index numbers coming out as expected. We did see some volatility in the dollar, but after such a whole big week of price volatility and choppy price movements, on Friday when that news got released, At that point, at about 9-10 o'clock, we saw that volatility with no clear directional bias. At that point, you can see here it basically went from that 101.80 level up towards 102.20, fluctuated within that range for the last couple of hours before now trading back lower again. Okay, so just today it was fluctuating around that 102 level. Right now trading lower, breaking below that 101 or breaking below that 101.80 level. Okay, so getting to a key level at this point. So far so good. Any questions? I saw a couple of you have just joined us, so better late than never. I hope you've got any questions. Please put it into the chat. If you're new to the session, drop a message, say hi. If you're regular, good to see you again. And remember, help me out, click that like button if you like what we're doing here. With that, let's look into this week. All right, let's look into this week. Today, Monday, not a lot of things happening. We did see prices move because of some breakouts on the consolidations so far. All right, thanks, Tom. All right. On to Tuesday, again, what you'll notice is that we do have a lot of news events, but not likely to be big price movers at this point, right? Not likely to be big price movers at this point because the focus is on the big news event onto Thursday, right? Early Thursday morning, GMT plus 8 at 3 a.m., we do have the US Fed funds rate decision, right? Was currently at 4.5%, expected to go to a 4.75%. So market is expecting a 25 basis point rate hike to come from the US, from the Fed Reserve. That's most likely going to be priced in already. What you do need to pay attention to is on the statement and also in the press conference if you are going to be trading this news event. Put into the chat, are you going to be trading this news event? Will you be staying up if you're in the Asia session, or if you're anywhere else in the world? Would you be trading this news event? Great. Hi Suki, how are you doing? Peter, can you repeat what happened to the core CPI last Friday? Why it was undecided? I'll get back to that. BL will be sleeping. All right, that's possibly a good idea, right? I would recommend that if you are not used to trading news events, sleep through it, get into the session the next day, look for the analysis, then start trading after the event. It'll be a lot safer. But if you are trading the news event, pay attention to what happened or what's said during the press conference and the statement. Why I say that is because 25 basis point, pretty much priced in, pretty much expected. What the market is looking towards now is whether the Fed Reserve is going to comment about a pivot. What I mean by a pivot is a slowdown, right? They're talking about 25 basis point rate hike, I think, till it gets to 5 point something percent. I can't remember, 5.25 or 5.5%. Right now we're considering, our market is looking towards the Fed Reserve to make a comment saying that they're going to pivot, they're going to slow down on future interest rate increases. If they do say that, then we're going to see the dollar possibly weaken, right? But if it doesn't say anything about that, we're possibly going to see the dollar strengthen quite a bit, all right? Because we've seen very good data, we've seen very good CPI data, we've seen very good employment GDP data right across the board, indicating that we might see, that the economy is doing well. CPI is slowly trading towards the downside or slowing down towards the downside. Anticipation is for the Fed Reserve to talk about a slowdown in terms of interest rate hike. If they don't, then we're going to see that dollar strengthen back up again. Okay, so just pay attention to that on Thursday. I think that with the Thursday news event coming out, a lot of all the news, the ADP non-farm, the ISM manufacturing, the JOLTS, might move markets, but it's not going to have a significant impact at this point because of what's coming up. Okay. Hey Desiree, how are you doing? Oh, sleep. I can't keep up when the whipsaws. Yeah, sometimes I would say that's a good approach to take. Turn up on Thursday morning or Thursday afternoon, then start trading. When the dust has settled. Um, I wouldn't recommend news trading to a lot of traders unless you are very used to it already. Okay, so coming back to Peter's question on what happened on the core CPI. It wasn't so much the core CPI, it was the core PCE price index. Right, it is also an inflationary news, inflationary data that the Fed Reserve pays a lot of attention to. But why it was a bit undecided is because it came out as expected, and also it's a monthly number. Right, it's only a monthly number. No big change came about at that point, and that's why we saw the dollar index didn't do too much. Right, so it was released at 9:30. So it was released right at 9:30 or 9:10 o'clock here. And then we saw price shoot up, trade around that range before ending the session almost at the same level. And also another reason is that it was towards the end of the week. And that's why we saw prices not really forming a new direction. There wasn't a big surprise or a big change in the data to cause a directional bias to form at that point in time. All right, so I hope I answered your question there, Peter. A lot of high impact news on Thursday. It is a lot of high impact news. We've just talked about one. I'll get into the next couple. Will that be good for the US currency? Trade one pair and know it well. Okay, so it will if we do see. Okay, so coming to the analysis here. So when I look at analysis, I'll do it on the H4 time frame. Just take note that we do have a key support level here. Let me just change this line. Right, we do have a key support level here at about this 1.101.50 level. Right, 101.50 level. And we also know that it has been capped at about that 102.20 level. Okay, so it's been trading within this range. Not a lot of, trading within that range over the last week. And actually, if I stretch it back, you can see that since quite a while ago, we've seen the dollar really trading within that range, tried to break out higher, came back into that range. Downside still limited by that 101.50 level. To me, how I look at this is if I zoom out right across, you can see that we had big downside, but it's consolidating right at this range for quite a long period of time now. Right? So if we do see the Fed Reserve not comment about future interest rate hike or slowdown in future interest rate hike, I'm anticipating some upside potential. So like what Suki says, it'll be good for the US currency. So I'll be looking for possibly that move towards the upside. Right? That move, the test of 101.50 to trade up, right? Push above that 102.20 level for further upside potential. How high can it go? We know that we do have a level there at about 102.92, about 103, right? As a good support and resistance level. We see price push towards the upside. Okay. On the flip side, if we do see the Fed Reserve talk about a slowdown, they might say, hey, data has been strong. We are possibly looking at slowing down on future interest rate increases. No more 25 basis point rate hike. We might slow it down to 10 or 15 basis points. Then we could see this trade lower. It does need to break below 101.50 strongly. If it breaks below that point strongly, then going to the daily time frame, the next key level I have is about this 100 level. Okay, we do have a bit of a support at 101.25, but I'm looking for it to break strongly. So if we do see it break towards the downside, it brings 100 into play. It brings that 100 level into play. So looking at this point with a lot of intent, because it is at a consolidation. We're looking for that breakout potential above 102.20. We could see 103. Below 101.50, it could set a new low, breaking a new low towards the 100 level. 100 being a psychological big round number level. And also you'll notice that the last time we got to 100 was back in April last year. Right, April last year, where it broke above that point and then had that big upward move. So just be extra careful on the dollar index at this point. All right, any questions on the dollar index at this point? Can you cover on Aussie Kiwi? It went up so strongly last week, now dropping hard. Is there a fundamental change? Because the last 3 days candles. Okay, I'll look at Aussie Kiwi there, Desiree. Any other questions? Okay, if not, let's look at dollar. Wait, let me just finish the analysis here and I'll look at the dollar Kiwi. Okay, what I want to share with you as well, let me just do this, is if you want a bit more info on the dollar index, I've actually done a write-up on what happened over the last month. What happened over the last month and what I think could happen. We've talked about the Fed funds rate in Feb, the non-farm payrolls and consumer price index to be released soon. It's all written up there. Okay, so you can get a bit more info at that point. You can just jump onto my profile and then you can read the post there. Okay, I also did the yen as well. So looking at the news, not just onto Thursday where we had a Fed Reserve with their interest rate decision. Thanks, Suki. Not just on the Thursday with the Fed interest rate decision, we also actually had or have the Bank of England, the BOE, with their interest rate decision, 3.5%, 50 basis points to go to 4%, right? A 50 basis point rate hike to go to 4%. You can see that the last few times they've always done, firstly a 75 basis point in November, a 50 basis point in December, and then now again another 50 basis points. Although this might be almost expected, you do want to pay attention for the Bank of England, especially with their rates decision, to the bank votes, right? The way they are voting for this interest rate decision, because this happened in December. It was expected to be 00 or 900, and what it means by 900 is you can see here that the first number is how many members voted to increase, second is how many voted to decrease, and third is how many voted to hold. Okay, so this surprise in December, this surprised markets where we had two members voting to hold interest rates at 3 point at that 3% level, right? We had two members voting to hold interest rate at that 3% level, and because of that we actually saw a big reaction on the pound dollar, right? Showing you the pound dollar here. Where's my pound dollar? There we go. So on the pound dollar here on the 15th of Feb, going all the way back, 15th of December, this was this, right? So although they increased interest rates by 50 basis points, we saw, we're expecting this to push towards the upside, but that news release, and we actually saw it shoot towards, this was a news release here, we actually saw price shoot down because of 2 members voting to hold rates. All right, with 2 members voting to hold rates. So what happened with now? Okay, right now with price at that 1.2445 level being a good strong resistance level there, a good strong support at about that 1.23 level. We've seen prices trade within this range over the last couple of weeks. What I'm anticipating now is possibly a break towards upside. If we do see that the members vote at a 702, right, as expected at 702, this might be a bit more priced in, not so much of a surprise. So I'm looking for that upward move. Right, I'm looking for that upward move on the pound dollar. Bear in mind that we're looking at it on the current price. This is the news that will be following the FOMC interest rate decision as well. So what actually might be happening is that if we do see that dollar strength come into play, we might see pound dollar shoot down, right? And then when the news comes out with the Bank of England's interest rate decision, it might push back up again. Okay, so based on the current price, on the overall direction, I'm looking for some upside move on the pound dollar following that interest rate decision. And if we do see that 702 maintain, we could see this push towards upside. If we get a surprise and it doesn't come out at 702, it comes out at 900, then that upside is going to be huge. We're going to see a big upside move because it's going to show that the 2 members that voted to hold interest rate is now voting to increase interest rates. We've got a combined view to push rates higher. We're going to see a big upward move. Okay, so main thing, pay attention to the level, the resistance level at 1.2445 as a key level, key resistance level to break above to see that big upward move. Okay, so relatively straightforward there for the Bank of England with their interest rate decision. And then on to Thursday, again into the evening at 9:15 p.m. GMT plus 8, we have the monetary policy statement from and main financing rates for the ECB, the European Central Bank. So 2.5% expected to go to 3%, a 50 basis point rate hike. The members of the ECB has been full on about a that the ECB will continue to raise rates by 50 basis points this meeting into the next meeting into March. Then they will reconsider at whether they're going to adjust their current policy or not. Okay, so with that 2.5 to 3%, a 50 basis point rate hike, what we're going to expect here on the euro dollar, right now trading a lot higher, still capped by that 1.0930 level, needs to break above that point. Next key resistance level for the euro, we do have it at about 1.1155, right? So I'm looking, if we do see the ECB continue on with their talk about further interest rate hikes, we're going to see this push above 1.09, possibly trade quite significantly higher towards that 1.1155 level. Okay. How many, don't understand what do you mean by member votes? How many members are, and where do we see the votes? Okay, Tom, you can see here on Forex Factory with this one here. So MPC official bank votes, there is only 9 members. So there's only 9 members. You can see here that the first number, 7, or now currently at 7, means 7 members voting to increase. 0 means 0 members voting to decrease. And 2 means 2 members voting to hold interest rates. So you can just get it here on Forex Factory, and you can see the voting numbers being released at 8 p.m. GMT plus 8. All right. Okay, so with that, and then on to Friday, after all that big news events, big firework events on the central banks, we end the week with the non-farm payroll number, non-farm employment change number for the US. Previously was 223, expected 193, possibly going to be in that 200 region. Okay, average hourly earnings possibly going to stay at 0.3%. Unemployment rate looking now forecasting at a small increase from a 3.5 to a 3.6%. So because of this, I don't think that the employment data on this Friday will be a big news event, or we're going to see big surprises there compared to what happened last month. Okay, so I think that the main focus will still be onto Thursday with the FOMC, with the Bank of England, and also with the ECB with their interest rates decision to be released. Fair enough. I will get to Aussie Kiwi and the Aussie CAD for you guys shortly, for Desiree and Jamilu. Any questions at this point? Any further questions? All right, so now looking at the Aussie Kiwi. Okay, so when you trade the Aussie Kiwi, do remember that you do want to pay attention to the Aussie dollar, how the Aussie dollar is doing, and how the Kiwi dollar is doing. All right, so before we look at the Aussie Kiwi, let's look at what happened on the Aussie dollar. Aussie dollar, big strong move towards the upside, capped by that 7-1, almost 7150 level. All right, so within that range, I do like to put it at a body, so about 7125. I had a trend line which was quite interesting, where we saw this being slightly broken already, right? So just watch out for that. And then we can see that that big upward move consolidated, some retracement towards the downside. Not strong enough to consider as a correction down, but I think that we're going to see this trade right across. With that, then we look at the Kiwi dollar, a lot more choppy price action. What I mean by a lot more choppy price action, you can see all the tails towards the top and the shadows towards the bottom. So you can also see that it's being capped along that 0.6530 level, bit of a support level here at 6450. So it's trading right across both on the Aussie and the Kiwi dollar. More of a horizontal range on the Kiwi, some downside potential signaled on the Aussie dollar. So when we look at the Aussie Kiwi, that's why we see this push slightly lower. Right? Why we see this push slightly lower is because similar, it went up, had a good push towards upside. Why it retraced back down is because of the dollar, well, the Aussie dollar weakening. The Aussie dollar weakening, pushing price back down again. Okay, Kiwi dollar seeing right across, Aussie dollar weakening, seeing that downside move. At this point, I think that we could see this come down possibly towards that about 1.0870 level, or at the most at about that 1.0850 level. Okay, we could see this push lower. Where is it going to be heading towards? It would have to depend on the Aussie, whether we're going to see further retracement or correction towards the downside. If that happens, we're going to see it break and trade significantly lower. All right, or if the Kiwi dollar strengthens. I don't think we'll see the Kiwi dollar strengthen, and also, unfortunately, I don't think we'll see the Aussie dollar weaken too much, anticipating that we're going to see further interest rate increases to come from the RBA. So what I'm looking for, whether it is going to be that 1.0870 1.085 level or 1.0850 level, I'm looking for, or rather sit out, wait for it to come down, test, and look for that buying opportunity, right? Look for that buying opportunity back up towards that 1.0975 level. If it breaks above that point, then to the daily time frame, the next key level, 1.1143, very high. I would say that a fair level there also at 1.1045. Right, so sit out, wait for it, let it break above those, let it bounce off the support levels before we see further upside, possibly driven by the strength on the Aussie dollar. Possible strength on the Aussie dollar. Hope I answered your question there, Desiree. All right. Then Aussie CAD. I don't have that one, so let's bring that up. Aussie CAD, same thing with the Aussie and the Canadian. Well, Aussie CAD and the Canadian, you want to depend on, well, looking towards the Aussie dollar and also the Canadian dollar. We've just seen the Aussie looking at possible some downside move. On the Canadian front, I was actually very keen on this level at 1.33. Right, I was looking for this to bounce up towards the upside, a brief upward move towards that 1.34 level. Didn't really work out. I saw with this, let me zoom that in, with this rejection level here. So I don't think it's going to push higher anymore. I think it's going to trade lower. Right, but it does need to break below 1.33 before we're going to see significant downside on the US CAD. Bear in mind, this also will depend on how the dollar is going to perform. Dollar strength is going to see this bounce off. Dollar weakness is going to see this break through. Okay, so back to the, oops, I lost it. Aussie CAD with the resistance at 0.9540 and a good swing level here at 9430. Right, I would stay neutral for now unless it breaks below this support level, right? Resistance turns support level. If it does break lower, it could be because of that Aussie weakness trading lower, or that US CAD strength trading lower, with the next key support level here at 9290, right? 9290. So only look for it to break. If it breaks below, then we're going to see the downward move. If it bounces strongly, what I mean by bounces strongly, I would say that above 9450, then we're going to see it possibly test at 9540 level again. Make sense there for you, Jamilu, on Aussie CAD? How will the floods have effects on the Kiwi? Generally, not a big effect on the Kiwi at this point. As much as the floods is a somewhat of a natural disaster, it doesn't have that big shock to the economy. Right, it does have a impact, but not a big shock, so it's not going to have a significant impact on the Kiwi dollar. The link is there, so jump onto the link. Let me see. Okay. Now, what was the next one? EuroCAD. Looking at the EuroCAD, right? Anticipating that euro dollar strength onto Thursday. Looking at a possible euro strength onto Thursday. That's going to drive the EuroCAD towards upside with a key resistance at 1.4630. Right, you can see it's already bounced very strongly over the last few candles off that 1.4455 level towards upside. So I would say that it is at a bit of an interim level at 1.4537, 1.4540. Look for this to break. If we do see further euro dollar strength, this could be dragged up because of the euro dollar. Actually, this looks like a very nice potential trade idea, right? You have about a 80 pip take profit, about a 30 pip stop loss of 1:2, almost 1:3 risk reward ratio towards the upside on the euro CAD. All right. Mainly, I would say, try the link. If not, search me on TradingView. You'll find it there. Okay. Um, does that answer your question there on the euro CAD? Okay, I will do US 30 NASDAQ and then the pound dollar. So, where's my. Oh, wait. I had this usually drawn up. I'm using a new profile. Alright, so with the way the US dollar is behaving, right, we are seeing very choppy price action at this point. You can notice here that we saw try to spike up a big retracement. I'm paying a lot of attention to reaction at this 3400 or 34,000 level. That rejection there coming back down towards this level at 33740. What I'm looking for here is if it does break down from this point, then we could see it come down towards 33432. But that would also mean that we're possibly going to see that dollar strength come back into play. Right, we're going to see a dollar strength come back into play. But I think what we're going to see is something very similar to what we saw here last week. Right, so it's going to trade, most likely going to trade back into this range, and then it's possibly going to do something very similar to what it did here. Going to fluctuate around this level all the way to Thursday, where we have the FOMC with their rates decision. So I'll be looking for this to bounce around. If it does break lower, a big key support level here at about 33,000 level, round number level. If not, then breaking upwards, we're going to see that 34,000 come back into play. Quite straightforward there. And then on the, where is it? Sniffing a little bit. Okay, similar view. Just a very similar view. What I will also notice here is a bit of that upward diagonal. So I'm looking for this too. That rejection of that 12,200 level towards the downside. We are approaching a bit of a very weak support level there at 11,973. If it does break down, we could see it come down to test that diagonal support level before possibly bouncing up. Alternatively, that dollar strength could cause this to break downwards, with the next level at about, I would say, 11,554. Okay, so a lot of it, unfortunately, a lot of it right now, it's all short-term view because we do have a big news event to be released on Thursday with the interest rate decision, which could change the landscape of prices right across the board. So just be extra careful. I'm a bit wary. You notice that I usually give you guys price levels, support, stop loss and resistance levels, well, stop loss and take profit levels. But today I'm a bit hesitant on that just because a lot of things can change very quickly with that news decision on Thursday, with a series of news decisions on Thursdays. Okay, so far so good. Let me know if it's all good for you guys, and if it's good, do me that big favor, click that like button. Pound dollar, I did pound dollar already. Dreamfly, right, with interest rate decision due on Thursday. most likely going to consolidate around this range. US interest rate decision could push it back down a bit, but I'm still looking for the upside move. Right now, not going to do anything unless it breaks above 1.2445. Next key resistance level on the pound dollar, I would say, is at about that 1.2660 level. All right, 1.2660 level. With that as well, whenever I see charts like that, it just reminds me of what happened there when we were trading it down, and we're talking about at that point, will the pound dollar keep going down towards parity? Look at it now, it's reversed completely, and we're looking at it forming new highs back from where it was in May last year. So it's going to be quite interesting. If it does break above that level, we're going to see it come back up towards May's number from last year. Answers your question there, Dreamfly? Yep, that's me. And then gold. All right. I'm quite happy to tell you that I have been just today trading gold quite a bit. Show it to you on H1 time frame. As price found a support level, well, it failed to break lower and traded higher. Was this my trade? 12 o'clock. Yeah. So I entered a trade towards the upside. I had a long position. I don't remember the price. I do know that I had about 40 pips, about 40 pips there, and then a 40 pip stop loss there. So that was my one trade up on gold. So I traded that up because I was also looking at it with a resistance level towards that point. So I have first trade up, hit that resistance. It started reversing back down. I didn't enter a trade there, but then I scalped it towards the downside, right? So I was actually selling it back down. I was very cautious. Why I scalped and not hold a swing trade down is because I saw this low, right? So I entered a trade back down. If I'm not wrong, I had about a, oops, again, I had 40 pips there. I had about 40 there as well, right? But then I didn't hold it all the way down. I closed off halfway in the middle, and then as it broke, I did another trade towards the downside. As it broke, I did another trade there again, 40 to about 40 there, and then I got out of that trade as it just quickly before it reversed again. So that was my 3 trades on gold. A couple of you have asked about my challenge, my Forex Funds challenge account. I'm just started that. I'm going to be fully dedicating that challenge account to trading gold. So let's see how that goes. All right, I'll be trading gold entirely on that account. I'm looking forward to it. I'll be sharing with you guys how it goes as well. At this point right now, so at this point on gold, do note that it is trading in that range. Support at 1920, right? Support at about the 1920 level. Looking for a possible, if it does break 1920, I believe that it will get down to about that 1900 level. Okay, but it does need to break strongly first before it can come down. Not, then we could see 1945 back into play again. At this point, don't do anything unless it's for the short term. For the longer to medium term, look for it to break above, close above 1930 before we're going to see that upside move towards that 1947 level. Okay, so how I look at this, I think it's going to fluctuate within this range. If on Thursday we do see that dollar strength come back into play, then we're going to see this trade down, right? Because dollar is not perfectly inversely correlated with gold, but if dollar does strengthen, we're going to see gold trade down towards 1900. If that dollar weakness comes into play, pushing down towards that 100 level, breaking that 101.50, pushing down towards 100. Then we're going to see gold push strongly towards that 1947. Interestingly is if it breaks 1947 to the daily time frame, zooming right out, you see that the next level is almost at that 2000 level. Nice round number. It could also form as a bit of an attraction towards 2000. Okay, but what I'll notice is that it has been climbing very strongly. We might have to see some form of a deeper retracement before we're going to see price shoot up towards that 2000 level. Okay, so back to the H4 time frame, possibly going to range in this fashion for a while, test a bit lower towards 19,000, maybe before bouncing back up again. Answers your question there, Kelvin, on gold? All right. Any further questions from you guys? Yeah, most welcome there, Dreamfly. Most welcome, Kelvin. Okay, do remember, can't stress this enough. For me, all my trades, I'm totally neutral now because all my trades are very short term in the lead up to Thursday's event. I'm in a trade. Once it makes money, gets to a key level, I'm out. I'm not trying to anticipate too much because we could see, price and directions change quite significantly onto Thursday morning with the FOMC, the Bank of England after that, and then the ECB following on from that as well. All right. Yes, I will, Suki. I'm trying to set up the mechanics for that or the technical side of that, but I'll be hoping to stream that up. Do make sure you join up if you're available. Thank you, Alexandra. I don't usually trade gold, so it will be quite interesting. And that's why I wanted to do that, just to do trade gold on the account and just to show that it's share that experience with you guys. It will be on both. It will be on TradingView. I'll share it across YouTube. I'll put it wherever it can get to. What's my opinion about gold longer term? Maybe 1 to 2 years. I don't have a 1 to 2 year opinion on gold. In 1 to 2 years, I think that we could see. We're most likely going to see it continue higher, right? We're most likely going to see it continue higher, but we're possibly going to see a lot more volatility. It all depends on what happens through this year. Are we going to see a recession? Is there going to be a recession, global recession? If there is, significant upside on gold. If there isn't, maybe going to be capped at about that 2000 to 2005 level. The dollar, with the way it's going, looks like we might see it. Dollar strength recover, could provide some downside on gold as well. So it's going to be a little bit chop and change on gold. With the way I approach the markets, I don't really look at it on a super big time frame. Yeah, buy bullion, right? Buy bullion, but it's not as fun. It's not as fun if you're buying bullion. I think if you're buying bullion, then even longer than 1 to 2 years, keep it for the super long term. But don't buy it now. I think that we might see some look for retracement, a deeper retracement, before looking at bullion. Alrighty. With that said, I hope you guys had a good session. Do remember, trade well, trade safe. Help me out. Click that like button, and if you are going to be, interested in looking at a gold trading, if you're looking at joining me on the challenge, do check out my profile. I'll be happy to share the experience together with you guys. Thank you, Bia. Thank you, Suki. You're most welcome there, Tom. Thanks, Jan B. Thank you, Kelvin. Thank you, Mad Maniac. Take care now, guys, and I'll catch you again. Bye-bye now.